welcome to this video. Now today I'll be having a one-on-one forex session with Regan. So we are from Speke Resort Munyonyo, and the place was too noisy for us, so we are going to Speke Apartments. Then we shall see if the place is good. We shall have the session, so I'll be recording it in phases. Stay tuned to the video. Here's a one-on-one. To have a one-on-one with me, the fee is just around $15 an hour, so stay tuned to the video. So currently we're at Speke Resort, Speke Apartments, Wampeo. So we're going to have a one-on-one session. We're looking for where to have it from, and this looks like a perfect place. Yeah. So guys, I decided to show you some brief analysis on some trades we took for last week and insights. So let's go straight into the video. You see guys, the bullish week, the way the market moves, it can't move straight. Yeah, take it like this. Hey Harold, welcome to the live. I was supposed to have it yesterday, but I was kind of so fixed and didn't get the time I scheduled it for, didn't find me at my place, so that's why I pushed it further. So you see the way the market moves, bullish, correction, bullish, correction. I want you guys to notice a pattern. It spends most of its time ranging, and most of just little time. It takes a little time in a trend, right? It takes a very short time in a trend, like a movement. But you can notice that this trend line was so valid. You had so many options to enter the trade. If you see here, I lost this trade because I was looking for shorts. I first posted a setup in the morning. I was looking for buys. You get what happens is I got the same pattern and I expected shorts. And when news came in, it just gave me some trash pips. They are like 20 pips and continued with the trend upward. So the trend lasted through the Asian session and came back. This is where I sold from. I sent the signal to you guys. I saw this market, reason being I wanted it to come back to retest this trend line. And when it did, it formed a good W pattern. So remember the setup I sent to the group later that day. I told you guys I'd missed the buy, but it was a good opportunity to enter was this W pattern in here. This nice W pattern with this engulfing. So the market is currently here at this psychological level. So uh most people honest there into psychological levels. So I don't know what strategy he's using, and he didn't share charts. You get that's why you see it's trading. Okay, poorly I shouldn't be talking about his trading because sometimes they tell him about it. But it comes back to you as a human that if I'm teaching you something and you're not following it, how are you going to improve? I know you can develop a strategy on your own, but at the same day, you won't come back to me and I give you advice. But I'll give you advice according to the strategy that I know I'm trying to tell you about. So I told him, why don't you at least, I know you have a different strategy, add psychological levels to any strategy. It's going to work out for you. Just look at the points where psychological levels reacted here. Let me delete this. Even though you're using SMC, add psychological levels. These things are human psychologically. Look at the action psychological level. Look at this one. Look at where the wick stopped and the M pattern. Look where would be my entry here. It would be on this. I think this is an engulfing. You see the wick, then an engulfing. My entry would be. You see when this market creates a bullish candle and closes bearish. I mean bearish, right? Closes bearish. And this candle, this new candle forms. I would be entering here, but I would wait for it to pull back a little bit. So that I enter when it's trying to give me prices, like to help me enter earlier. Because I know it has already engulfed this. Then I test the market slowly with slow market movement. So when it goes into profit and bounces off such a zone, here you take profit because it has given you a week with a bullish engulfing. You think twice. But when it comes back, we may have something like a fib here. Yeah, we have a 61.8. This one here, 61.8. I hope you guys can see my chart. 61.8 and then engulfing. That would be another entry for me to go sell. The strategy is very simple. You get add confluences in. But you know, when I'm selling this market, I know the market is very bullish. You get I know the market is very bullish. Maybe say I draw a straight line. I know the market is very bullish. I'm not going to stay in for long. I'll take profit again from here, but this is a Friday move. I'll take profit again from here. Some entries would be closed, but I would leave some running, but stop loss at break even because I know it's still a bullish market and this trend line is still very valid. Reason being, this is news. All this is news. That's why I see it rallied back to a high of the week, but rallied. You know, news always NFP. If you've been seeing NFP, some people wait for NFP, this whole candle to close. They either wait for retracement, then they short again. You get. But NFP was yes, the dollars gain strength, but we have a general movement in price. Reason being, remember on the previous live when I told you guys that we have an inverse head and shoulders on the weekly time frame. Look at this. How does it look on the 1 hour? What? The news. Like, okay, I won't check that out. So you look at this. This is an inverse head and shoulders. It's a chart pattern. Now, the reason why news found us in, I didn't trade the news because I was very busy. But this still showing that the market is still pushing up. But it can come and do this and continue. You get all this may exhaust its trend, but we shall see the action around this trend line. Reason being, it has given us first touches like our second touch. So we expect this touch to hold more water for the drop. And if I think if I'm to check, there's another block up there. Let's see if there's another block. You know, the strategy is not complicated, but the more you seem not to practice it, you're not going to get it because M patterns will form in a different way. That's the truth, guys. They'll form in a different way, and if you don't practice, you won't know how it has formed. Now we have the market bouncing off a psychological level. Now you see, this is how why I would have sold. I saying this. Just look at this. You have a psychological level. You have an order block, and you have an M pattern on a lower time frame. Yeah. Why wouldn't you sell? That's the reason why you analyze on a bigger time frame. Then you drop down to the smaller time frames to get a better entry. Now this order block remain on the far, but you know this is an area. This is like a zone. Let's mark it out. This is like a zone, right? Yeah, like this. Let's go to the 15-minute time frame and see. Look at your zone. Just look at your zone. Meaning this market can drop further. Can drop further. Yeah. So guys, the strategy is simple, but you're not going to practice. I told you guys to uh, get the free trial, the FTMO free trial, because I want you guys to get funded accounts. That's the easiest way of avoid get capital to trade this market. Because you're not going to deposit $10 and expect something from it, unless you're going to try to flip it, of which you'll blow it. But if you practice, instead of wasting too much time on demo is going to get into your head, get a funded, get this free trial from FTMO. You don't pay for any money. It's the same as the funded account you pay for. You start practicing the same rules, only that this one is 14 days and it's $10,000, the free trial account. So as you practice, you prepare yourself for when you buy the account, you get, because that's the only one, unless you guys are telling me you have high risk tolerance and you're going to deposit $10,000. Okay. So it's very easy. I know I took in some losses in the week, but look, only these few trades. You see how disorganized the trades in here are, from here to here, then from here to up there. I recovered all my losses. Reason being, these are 100 pips in two moves. From here to there, from there to there, 100 pips. Then what happens? Yeah, I took this entry, but I lost to the NFP. I didn't even, I asked, like, knew the news would sell. Reason being, the previous day, we had this news. Where is it? Is that news we had? I think it was in here. Was it here? We had that news that showed, yeah, I think it was this one. All this. No, it was this. It was this news. We had the unemployment claims come and tell us that there are more, there are less unemployment in the US this last month. So the NFP had to show you guys that, whoa, I had to be bullish for the US dollar. So with this head and shoulders, kind of showed strength. But the reason why I remained in this buy was the week was showing us, it was rejecting a lot of news. If you come here to my Forex factory, you can see that, let's go to Monday the first. You see this news was positive for the dollar, this one. It was positive for the dollar, but what happened? The market went negative again. So let's see some other news. Even this one was negative to the dollar, but I don't know if it is. Let's see on the chart. Tuesday. Tuesday? Was it Tuesday? Let's go to Tuesday at 5 p.m. This is Tuesday. Let's get Tuesday at 5 p.m. So I guess it's this around here. I wonder if it's this. Anyway, I won't find it. But I'll show you guys the Wednesday trade. Wednesday. Now I see 3 p.m. This is positive for the dollar, right? It's positive for the dollar. What happens? Wednesday. Let me get it for you guys. What happens on Wednesday? Yeah? Market pushes for, I think it was this one. Their side it's showing positive for the US dollar, but look what's here. It's showing that it's negative for the US dollar. It flashed up. It took out many people who are, though later some sharp people enter from up here after the digits have been shown on the charts and they sell it, then it drops. You get some part too sharp, by the way. So I thought it's going to do the next correlation after this W pattern. And when it came back to the trend line, the psychological level, I thought it's going to flash up, but I wrote it in group that guys, I'm saying head and shoulders, but I don't know if let's keep our bias open. I think that's what I wrote, but I talked about the chart pattern here. Yeah, so guys, trading is very easy. Let's look at the trend thing. Now if you come psychologically back into real life, how trends are formed, right? Let's start from here. This is a downtrend. You see it's a proper downtrend. I took some serious. This was our first trade on Monday. Very profitable trade. I didn't take it, but I posted the setup in group. Some people didn't take it, of course, and they came to my DM saying, "Hey, I missed the setup. I thought you didn't give me enough tips." Why in the forex market you don't want to risk? This was supposed to be your first take profit. This one. Reason being, this is an order book. This is clearly an order book here. So you can see that also the market came and retested it and engulfed it and shot up. Then also came back, formed 2-week rejections and kind of like some chart pattern. So this was order to get out. I wouldn't blame you. But you take out some profit from here and leave it running to this psychological level. And those 50 pips, you get. So when it comes back the next day, I don't know what I was thinking. This is the loss I made. I didn't follow my bias. Now here, I anticipated the buy. Reason being there's a trend line coming from down. And this was supposed to be like another touch of the trend line in continuation. But I didn't analyze it fully to know that this was just a name pattern. And if I take this, if I had found the market running exactly at that time, I would have drawn my trend line like this. Now I didn't follow the rules. Remember when I told you guys in the group I broke the rules of wait for the trend line break and break of structure. My actual buy trade was supposed to be after the break up here to continue up, back up here. You get? That's where my actual buy was supposed to be here. Because this trend line would continue running something like this. You get? Meaning my actual, anyway, let's delete this. I want it to be perfect. So that when you see it again, my actual buy, let's take this area like this. My actual buy was supposed to be a bounce here in this area and a continuation. But I neglected it. I neglected the fact that the market hadn't broken structure, the upside. Okay. So he just came and gave us an M pattern there. I know Gracious was happy in this trade. He analyzed well and the thing shot down. That's the loss I made. I went back and when I was confirming my moves, I saw the M pattern on the psychological level and it was a downtrend. I went back into a lot of demise. Yeah. So that's the trade. That's the loss I took on Wednesday, Tuesday. Yeah, Tuesday. That was the first loss of the week. So Wednesday I come in and also make losses in here. I come in and make some good losses in here, like around here. But I recovered all those losses here. Just 100 pips from here to here to you guys know the setups I sent. You saw them. So this would be my other good buy. from here. Reason being, you have three confluences. You have the trend line, you have the high of the week, you have an engulfing. This is supposed to be the entry. And maybe you have also a fib zone from this to there. You have the 61.8 to buy the market. Though that would be Asian range. So you didn't take that trade. So I'll still telling you guys, I want you guys to go back to the narrative, the basics of trading. And start to analyze it for, and you know. Now you see the way the market forms trends from here to here. What happens? This is an uptrend, right? The uptrend has begun. It has begun, reason being, it broke this high to retest it, meaning resistance stands support. So this is higher high. I mean, this is higher low, higher high, right? What happens here in real life? What happens? Banks pump in more money at this point. Reason being, they want to drive back the market to take in more orders at a psychological level. This is what I'm telling you guys today. They pump in more money here to get in more orders that are waiting at a psychological level. And where does this come in from? Where does it come from? Let me do it. I want you guys to understand something. Why we even target psychological levels? Why you should add them to your trading? So what happens is the market is in an uptrend. There are orders left down here. Or people, or big figures are being looked up at a roundup number. They can't just enter huge figures in here. No, they want it to come back to a roundup number. So what happens? They pump in more money from this level, this one, to bring it back here. Meaning more money is pumped. That's why you see a lot, huge candles there, you know your retracement has begun. So what happens after? You expect more money than here to be pumped in. Let's say here, it's $1 million, right? To this level. They will pump in more money down here, like $2 million to push it further. That's why you're seeing huge candles. This was a successful, these were losses, right? So 1 million here, 2 million here. But what happens? We see a week. This is what takes out people. You see a week and you think, level has been violated. But what's the week? The week is to take out your stop loss orders. You get? So that people make a profit. Now they want to make a profit because of the more orders coming in. So they trigger a stop loss. A stop loss is an order. You get? It's an order. So when they trigger it, they push back the market, meaning they pump in more money down here to push it further up. So it closes above. What happens? A smaller one, meaning that shows the momentum has been reduced. Let's look at it as a real story. Momentum has been reduced. So what happens after? What happens after? A green candle shows up to show that buyers are stepping in with a weak rejection. Yeah? So what happens later? This is where I start pumping in positions on this green one. Before it even turns green, I pump in slowly, test the market. My stop loss is down here, below this week. So when it flashes up, I know I took this loss, but I wasn't supposed to take that. I just went aside my analysis and made those losses. Yeah. So pumps up, creates a retracement to that psychological level. I'm supposed to literally add more here. They pump more money into the market and push it further. Reason being they've taken in orders. Now the reason why they take this week is there because they want to buy at a cheaper price. I always tell you guys, buy at a cheaper price. They want to buy in at a cheaper price. Imagine the rich guy called for maybe say $2 million to be pumped in from here. You get at the psychological levels. So what do these guys want to do? They want to make more profit. Meaning they add it so that they enter at a cheaper price to take in more profit, all this profit. Remember, this guy will calculate that my entered from 25000. My next target is here. This guy will calculate that we entered lower than 2500. So I'm going to make all this profit. So the market pushes further. That's why I tell you guys, psychological level is a very important part. With some break, of course, losses are part of this business, but you're supposed to write down these rules. Yeah. Look at psychological levels playing out. Even here, same story happened here. Look at this week. Look at this week. And look at this week. You get same story happened. Psychological level to this. So this one didn't reach. But this week will tell you a story. This week will tell you a story. Take your profit. You reach here, you see the market creating a weak rallying back, you take your profit. Even though it's little, take the profit, accept what the market is giving you. Yeah? So guys, ask your questions. I think I've explained something. So the story just continues happening. Psychological level, they do that tricks here. You see the wicks pumping goes lower, you test it, engulf, take the trade. So guys, just ask your questions. You get ask your questions. And have like faith in the process you're doing. Don't just say, sorry, it's losses. Sorry, it's losses. Everyone starts with losing because there are so many things in play. Emotions are in play, so many things. So ask questions. If you guys don't have questions, I know you always have questions. Yeah, ask questions. Let's see. So the story happens, it continues happening. Same thing. If a psychological level is broken, this would have been another loss here. So this would be like an end pattern. End pattern resistance, but we would accept that because there's an angle of take that loss. When you exit. So how do I exit? I see I first exit at a psychological level, that's obvious, 50 pips, right? Then the trades I leave running, I look at the candlestick behavior. I look at the candlestick behavior. And I also look at candlestick behavior at key points in the market. Like here, if we see the market just left, this is like a tracer top, right? A spinning top tracer top. I would this looking at these areas because they are very key value areas. Why did the market just stop all of a sudden and reverse? So you take profit here, some profit, and you leave some money to the next psychological level. Take out this. You leave some money. This is such a weak, this is news though. But that's how I move. That's how I exit. That's how I exit the market. Yeah. So just basically that. So guys, I want you guys to go for the FTM option. Let's even try and see how it looks like, just for practice, and it will help me evaluate you and see what you're doing. Yeah. Let me just show you. What's the name? Harold didn't send me any setup this week, and Gracious is supposed to be on the slide, but it's not. I want you guys to so come to FTMO. You go for free trial, right? You go for the free trial. You register for it. Then I need you to pay anything. You just need to register for it. If you guys want a link, I'll send it to you after this live. You guys have not recorded the live. Oh my god. Oh my god. But anyway, let's move on. So, any question? I think I've explained almost everything. Only that you guys don't want to practice and you don't want to follow the strategy. About risk management. Now, I was supposed to tell you guys the risk management strategy. I was supposed to tell you guys the risk management strategy. Oh, this thing is recorded. I didn't know. I didn't know. Now, this is a video about the risk management. And it's on YouTube, though it's not so detailed. Yet. Oh, I recorded. That's lucky. So now risk management strategy is now It depends. I told you guys to first make use of this. So your concepts are not yet at that level, but once you know the total lot size you're going to use, yeah. Once you know the total lot size you're going to use for that specific setup, if it's 0.5% of your account, that's very easy. You know the total lot size is maybe 0.10, right? And you find such a setup. You find this setup here. Yeah, maybe the market is here, is around here, but you've seen an angle, you're not so sure. So you wait for it to say a week. What do? You wait for this candle to close. Once you see this engulfing, you start entering from here. One position of 0.02. You enter it. Where is the stop loss going to be? I always leave the market. I give it breathing space, right? My stop loss is going to be 20 pips. Sometimes it depends on the, I just put it there slightly above the wicks. So it will be up here. This is my stop. Sometimes it's 10 pips. It depends. This can be 15 pips. Because it sometimes can wick there, and drop. So at most I'll give it is 20 pips. I give it 19 always because I don't want the 20 to get me, you know, those there spreads and all that stuff. So after that, maybe say my target is it's always a 1 to 2. Sometimes it's 1 to 1, but it depends on the risk management I've put there. You know, I can risk you may see my take profit is easy, 50 pips, right? 50 pips is psychological level. But sometimes I can do this. And I'll risk twice. You get instead of 0.10 up here, I'll add more positions. You get, but my stop loss will be 10 pips. You get, it's the same thing. If I enter 0.01 and maybe say my total lot is 0.01, or 0.02, and I enter at 0.01, one position. Remember, my stop loss is 20 pips. Yeah, 20 pips. So what if I enter now 0.01 and reduce the stop loss to 10 pips? That's half. You get. It's like I've entered two positions, but they're taking in all the risk with a smaller stop loss. Now you have to think about, you have to be sharp about it. Don't put, if your total lot is 0.01, don't enter. And I mean, your total lot is 0.01 and you're putting your stop loss at 20 pips, but you want to add another position. And don't put it again on 20 pips so that you're going to lose twice and excess. Reduce your stop loss to 10 pips and enter another position. You have to be sharp about it. So when the market is moving in profit, I add one more position like that. I think it's a network. So I add one more position like that. Like if it goes in profit, let me say so, not in profit, add one more position here, but my stop loss will maintain there until I hit take my first TP. That's when I move all stop losses to break even. And it depends on the volatility of the market. If it's, I'm saying it's creating so many weeks, I'm pulling back and it's too risky, I move stop loss to break even so fast. Now, you know, it's a business. You have to be sharp about it. Once the market has given you something, protect it. If it's in profit of 10 pips, protect your profit you've made. Yeah. So you have to protect it in a way that you know the market can come back, then can fluctuate. You know, there's so many fluctuations. So you have to be sharp about it. Maybe move stop loss to break even for some positions and leave some above. It's that you taking the risk. Yeah, so guys, ask any more questions. We shall keep looking more on risk. I think I should make one full video about it. It will be like 41 hours. You know, there's so many strategies I have for risk management. It depends on the market, how the market is moving. Yeah, I'll make a video on psychology, I think tomorrow. Then we shall have another session during the week. Harold, please remind me. I think Tuesday or Wednesday. Shall have one for risk management and analyzing the market. Wednesday, I think. Just remind me, because guys, nowadays I tend to be so busy and I forget. Yeah, I think that's it for today. Any more question? I told you guys this will be very short. Because you guys go to FTMO. This week I'll ask you guys a lot. FTMO, sign up for the free trial. Try out that funded challenge. It has rules. Don't lose this percentage in this period of time or in a day. At least you evaluate yourself, and you know there's a graph. It tells you the losses you're making and the profit. And don't be on demo so long. You know, a real account can teach you and help you move faster than a demo. A demo, you have to learn yourself. Yeah, I sent you guys anyway. So I think that's it for today. Any questions, guys? Any more questions? We are five. We are five. We're supposed to be like eight. So, 8 or 10. All right, man. Big Ben. Supposed to be that side today, but I'll come next weekend. Next weekend. Next weekend I'll be there, I think. Next weekend I'll be in Tinder. All right, man, you guys. Thank you for being live. I think Harold, I think you have no question. Just remind me on Tuesday or Wednesday we have what live. Halfway. So guys, thank you for being on this live. Harold, any question? Here is a question. Any question? So the strategy is simple. Analyze the 4 hour, 1 hour, come and look for entries on the 15-minute time frame. Repeat that over and over again. But remember, chart patterns with bigger time frames play a major role. A major role, right? There's something. Our G is still in an uptrend unless we see a changing trend. Now this week, this thing over, you see, this was like a fake out, but went 100 pips and came back. But the major trend for the week was an uptrend. So I forgot something. G is still an uptrend. Don't mind they may have a retracement of that AMA. Monday, I think we're going to, I have thoughts. So we may have a retracement of this huge move. We may have a retracement of that huge move. Let's see. We may have a retracement back to the psychological level before we long again. Yeah. Once mentioned bigger order blocks, and yes, bigger order blocks happen on the 4 hour and the daily. Then the smaller ones, 1 hour, 15-minute time frame. Though the 1 hour is bigger than the 15, so you hold more water, you get. So when you're using those order blocks, on the 15-minute order block, don't over consider it. Unless there is a psychological level or a fib zone. That's when you consider it a lot. When it gives you full confidence, consider it. But if you find a 1 hour one, it's huge. So you know the market can rally through it badly. So don't use an order block until you see other reasons why. The reason why its M pattern is here, why would have taken it? There's a huge order block on the 4 hour time frame, and there's a psychological level, and it gives us an M pattern. That's why we would have sold. Exactly that. I know there are so many, they confuse you, but you know you can backtest it and form your own strategy out of that. You can. You can. It's very easy. You just repeat the same thing over and over again as you journal. The same trade you took today, on Friday, it was a good trade. I even saw one of those big traders had the same setup we had. Same setup. Same setup. I'm going to share with you the video. If you think I'm lying, just send me a DM after this. You're going to see the same. I saw he posted the same video. Who sent it to me? I think it was Jimmy sent it to me. He's like, yo, you guys are trading the same strategy, but you have the same setup. It's just news that messed it up. So allow me end here, guys. Allow me end here for today. So have a good night.